Well, managing a home is never as easy as what we want it to be, but the process does become a little bit more manageable when you have people like the Eaton Community Bank to really walk you through the entire process from start to finish. That's why Louis Sallow is here in studio with us today. How are you?
Good, how are you?
Fantastic, because I love talking about these conversations that are so needed and so necessary in our community. And one of them happens to be, how can existing homeowners really leverage their home to improve their overall financial health?
Yes, that's a great question. There are a multitude of options that people have when they own a home that they could use to leverage their home to help them with their financial decisions or financial situations that they are facing in the future. There's a variety of options. You could look at a refinance or a second mortgage, a home equity line of credit, and even home improvement loans that could be used to help the homeowner reach their financial goals and tap into the equity of their house.
So Louis, what is a homeowner looking to refinance? What do they need to know from the beginning?
If you're looking to refinance, it's all about timing. It's going to be, when did you buy your house? Where are interest rates at now? Where do we think interest rates are going? So really it's about timing when it comes down to a refinance. Rule of thumb, we'd say if you can drop 1% on your mortgage rate, then look at a refinance. A lot of people aren't in the boat to refinance right now just because of the low interest rates that we had in the last 5 years. So we could look at other options, including fixed second mortgages or home equity lines of credit.
Okay, so the timeline, like you said, is a key indicator here. Well, it certainly seems also that consistency is a good thing when you're dealing with finances too. So Louis, tell us, what's the difference between refinancing and utilizing your home's equity?
Yes. When you refinance, we're going to take out the first mortgage and rewrite that first mortgage, and that would be a new payment. Depending on interest rates, the timing that we spoke about, that might not be the right option. So we would look at doing potentially a second mortgage or a home equity line of credit, which both of them would be second liens on the property, but the second mortgage would be a 15-year fixed mortgage. So you have a fixed payment, not a variable rate, not adjustable rate. Payment number one would be the same as the last payment on the loan, whereas a HELOC, that does vary based on the amount of money that is used by the homeowner and the amount of money that they take out or they use on the line of credit.
Okay. Well, Louis, I also want to bring into the conversation a home improvement loan. Is that a mortgage or a line of credit as well? Can you talk about that?
The home improvement loan, it could be a mortgage, it could be a line of credit, but we do also offer for some of the smaller home improvement projects up to $25,000. It's unsecured, so it doesn't encumber the house, and that could be used to do new roof, new windows, siding, replace a furnace issue. It could be used for a number of items related specifically to the house, and we could have that approved typically in 3 to 4 days.
Okay. Well, that timeline, the timing, the consistency that you all just mentioned clearly are really important factors in this conversation. So thank you so much for starting that off with us here today. And of course, if you want more information or you want to speak to us one-on-one, we have Eaton Community Bank's information listed below. But thank you so much for joining us today.
Thank you.